morning and welcome to the VSA Morning Miner. It's Tuesday, the 5th of August, and I'm joined by Paul Rankin. Paul, how are you today?
Very well, and a nice sunny day outside too, looks like.
It is, yeah. Right, there's a few bits of news. We'll start with London, though. We've got completed feasibility study from Tungsten West.
That's right. Tungsten West has put out into the public domain now the feasibility study for the Hemerden tungsten mine near Plymouth in the UK. That is a 29% internal rate of return at an NPV 7.5 of 190 million US. It is based on a tungsten APT price of $400 per metric ton unit, and that current price on APT is around 460. So, if they can get it to production the sooner rather than later, probably the better. But the main thing is these numbers were reconfirmed from May as they were preliminary findings, and this now puts the numbers into the public domain for the potential financiers to refinance the restart of the mine.
Yeah, obviously the key thing I think to look at the moment from share price perspective, which is still around 9p or just under, is the EV rather than the market cap, because obviously the CLNs are much more significant than the current market cap, and obviously have a specific structure for conversion. So remembering that dilution in relation to the valuation for the MPV that's been published and where the financing might happen is pretty key at the minute.
Mm-hmm. That's right.
Sticking with the smaller companies and staying in the same sort of metals, we've also had an update from Stellar Resources.
Yes, that's right. ASX listed Stellar Resources XRT ore sorting results are looking pretty promising for their Queen Hill mineralization there in Tasmania. This is for tin tungsten mineralization, and it does indicate that it sorts fairly well, and they managed to reduce the mass of rock to pass into the milling circuit by about 21%, but still retain over 97% of the contained tin by assay entering into the mill. So that also means that they'd have lower capital costs per ton of tin to be produced, but also it reduces the operating grinding costs because the waste material is a harder material than that which contains the tungsten itself. Also brings the mill feed grade up nicely too, up there into the middle between 1% and 2% tin range. So they will, I'm sure, be incorporating this into the mine development plan.
Yeah, it could even be higher, that head grade, as their drill results from earlier this year. I think they got about 17 metres at 1.79% tin and 6 metres at 2.2% tin. So there are some really high grade zones at Queen Hill, so it could be even higher than the test results.
Just that much more profitable than the process.
Yeah, but we'll see how that averages out in Q3 when the Queen Hill resource update is due. There's also it's not a profit warning, is it? It's for goldfields on JSC. It's the opposite of a profit warning.
Well, it's still a profit warning, but it's going to be way better than what anybody's expecting, and they're required to release these under JSC regulatory rules as well. The Goldfields is going to report a bumper profits here when they come out with their results on August the 22nd, they say. Well over 200% increase here on the half-year interim period is expected, and the headline earnings should be at least $1.09 a share on the interim period, and it was just 36 cents last year. And that on the back of gold production, which is really up nicely as well, up 24% in the first half to 1.1 4 million ounces from what was 918,000 ounces previously. So they're still expecting during the year something in excess of 2.25 million ounces to be produced.
Looking pretty good there. And just to finish off with Atlas Lithium.
Atlas Lithium is a NASDAQ listed company which is otherwise operating in Brazil. They have put out a feasibility study for their Neves lithium spodumene project, and this is one of those projects that is quite likely to get developed here regardless of the actual spodumene concentrate price, because its margin is so high. It's going to be IRR of 100 and some percent based on the feasibility study results, and they are a operator and vertically integrated as well. Atlas is, because they sell all the way up into the battery delivery sector. So it is one that will add to the current supply of spodumene concentrates in the world market.
Yeah, it's also fairly limited capex.
Yes, that's right. Well, part of the reason why it has such that high IRR for sure.
Yeah, and obviously Brazil has formed for getting low-cost projects into production historically. All right, Paul, thanks very much. We'll be back tomorrow.
That's very good. Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.